Now, in furtherance of the present administration's objective to attract more foreign investments and create economic opportunities, President Muhammadu Buhari last week paid a 3-day state visit to Germany, Europe's largest economy. This second visit to Germany, among other things, discussed economic and trade relations, as well as the president participating in a business forum in Berlin with leading German companies already active in Nigeria. Gabriel Idahosa, economic policy analyst and the chief executive of Uhimaji & Co., joins me to talk about this. Beg your pardon. Good morning to you,
Good morning.
Gabriel. Thank you so much for joining me on the program. But before we start this conversation, let's listen to this report that highlights some of the economic and business relations discussed during the visit, which formally ended on Saturday.
Nigeria has friends in the German economy, and like true friends, they're bound in a crisis. Nigeria is currently in the grip of a recession, but as Germany's second biggest trade partner in sub-Saharan Africa, there are currently more than 80 German companies operating there.
So what we would like to do is to encourage Germans and German companies to come and invest in Nigeria and work with us to build areas of mutual interest. And this will include the traditional areas like, auto, spare parts, machinery, to areas like learning how you actually industrialize by training your people to be good, productive workers in industry.
With a population of 100 million, Nigeria is a huge market and a prime location in West Africa. But the country is heavily dependent on its oil industry, and the recent slump in oil prices has left a gaping hole in the economy. The oil facilities also have to be heavily guarded due to attacks from militant groups. The country now needs investments in better infrastructure. That includes roads and power.
The power sector we see as a sector of massive importance, because without power you will be having difficulties to produce anything. And currently, just looking at the population and the need they have from the industry existing, without additional investment, they already have a massive capacity shortage.
Breaking away from oil may be an unsettling move for Nigeria, but the German economy will be right beside it.
So that sets the tone the tone of the conversation I'll be having now with Gabriel Idahosa, who is the CEO of Uhimaji & Co. Thank you so much for sticking around. Of course, you listened to that report.
Yes.
What outcomes do you expect from last week's trip by the president from an economic and investment point of view?
Essentially, for a country like Germany, which is highly industrialized, has the financial resources, the technical capacity to do whatever they can do with Nigeria, you want to look at more and more into either foreign direct investments or public partnerships. The reason is that at this time, we would rather have investments than borrow money to do anything. Because if you borrow, you're going to worry as to how you're going to pay them. Your dollar earnings are coming down, so you don't want to have too much of really dollar or foreign currency borrowing. But you can use all the investments that can come in, particularly in power. Germany has a long experience in renewable energy, solar, wind, and right now NEC has started licensing solar power plants. So that's a huge opportunity that we can get the Germans to come and do. And again, it does not have the risk of thermal power plants, which depend on gas. And they are also very easy to deploy. You can deploy solar power plants anywhere in Nigeria. And the power can be supplied without waiting for the transmission, the national transmission grid. Solar power plants can be supplied to neighborhoods, to estates, to university campuses, to villages, right at the point of deployment. So that's a big area that we should encourage the Germans to look at.
Why do you think that at this, of course we've got the population, we've got the market, and a lot of countries would like to partner with Nigeria, and Germany is inclusive. And according to the Minister of Trade and Investment there, they're looking to partner in areas of mutual interest. And you talked about industrialization. Now, for instance, we have some partnerships that already exist with Siemens in terms of power and the rest of it. But what do you think is a fundamental issue that these investors will be looking at before bringing their investments, before bringing their monies into the country?
Well, there's a fiscal regime, there's a policy, and then there's the operating environment. You need to have an operating environment where, as an investor, you are sure that, one, you can run your business with a relatively stable security situation. You can repatriate your profits when they do arise, and you can have a long-term view. There's a certain level of certainty on government policies. So these are the key things they are looking at. If you have that, they are very happy to come in.
But then you see, in 2011, a BiNational Commission of Nigeria and Germany was set up to deepen bilateral relations. How much do you think this has achieved?
Well, actually, if you see how close Germans have come to us, clearly that commission is working. The German president has been here, the chancellor has been here, the Nigerian president has been in Germany twice, and generally you can see the vibrance of the German business community in Nigeria. So it is working, and particularly for Germans, they clearly want to do more in Nigeria. So what they're asking for is the policy environment. Let's have consistent policies. Let's know that if we invest on the basis of this policy, the National Assembly or a government will not come after 2 or 3 years and change everything, and then we start all over again. So they want to have some level of consistency. They are aware that the security situation is a short term. In any country, security situations don't last for too long. So really, that's not the long-term issue. The long-term issue is policy consistency. If there's policy consistency and there's effort, as we see now, to address the security situation, most investors will come in. But they want to be sure that if you build a plant in Nigeria that will last for 25, 30 years, they don't want the government that will be changing policies every 4 or 5 years. That's the critical thing.
But then do you also look at this as an opportunity to reset Nigeria's investment, promotion, trade and bilateral relationship with the European Union, because Nigeria is still yet to agree with and sign the new trade deal with the EU?
Well, that EPA, the European Partnership Agreement, is there, but business community on both sides know that without that, we can't do a lot of business. Most of the German business community is not going to wait whether you sign or you don't sign, because we have to recognize that you sign an agreement with your national interests in mind. And no matter what they say, because you interact with these people, they know that you have certain concerns why you haven't signed the agreement. So they are not going to say, for example, because you don't sign the agreement, we'll not do business with you.
But then don't you think that will also reduce the amount of investors that you have coming in? Because like you rightly pointed out, you're looking at the policies and you're looking at the operating environment. How about if I bring my business into the country now, who is going to protect me? What laws are guiding my being in the country in terms of how much I'm able to repatriate after I finish doing my business? Because I'm in business to make money. It's not a charity organization.
Yeah, the EPA will not do that. The EPA does not define our investment policy. It does not say how we protect investors. The EPA is just a specific agreement between the European Union and African countries. But your basic investment policies and economic framework is not specific to agreement between two countries. So if I'm going to invest, I'm going to say what are the fundamental policies in Nigeria that protect any investor, whether I'm from Germany or Australia, or it doesn't really matter. It's those kind of policies that are important. This agreement is meant to satisfy certain specific objectives of both sides. This agreement has been thoroughly studied by various generations of government, and it appears that some governments, particularly this government and the previous one, were not happy with some items in the agreement. So that can be looked into. The specific issues can be addressed, but that is not as important as our global economic policy and business environment. The index for ease of business that is run every year by the World Bank does not depend on specific agreements between countries. It simply says, if I come into Nigeria to do business, how easy is it for me to do business? How easy is it to incorporate my company? What policies? How easy is it to get the land and get a C of O? Those things have nothing to do with an MPA. So those fundamentals that make business easy to do are the things that are really important.
So in terms of partnering in areas of mutual interest and helping to build the industrial sector, at the just concluded Nigeria Economic Summit in Abuja, skills gap was one major issue that was raised at a roundtable session with the Vice President. How do you think the federal government can partner with Germany in this area?
No, actually, Germany is already doing a lot in the area of skills. They have the dual vocational program. They have the delegation in Germany based in Lagos here that is doing a lot of work in exactly skills. And then German companies in the country have a lot of skills development program. They are doing a lot on that. I think we have to give the Germans a lot of credit on that. It could be improved. It could be improved. But Germany is one country that is really doing a lot in skills development.
So moving forward, how soon do you expect to see the benefits of Nigeria's bilateral relations materialize?
Well, that's the question really for federal government, not for the Germans. The Germans are ready to come tomorrow morning if you are ready, but it's for our government to decide how fast they want to take these opportunities. Because for most of our partners, they know that this economy is a very attractive market. They want to come in. All they are saying is, let's have clarity on your laws. Let's have certainty about the laws. If a law is made, we know that this law will be there for a certain number of years to come. And if it's going to change, there's going to be consultation. We don't just wake up and suddenly policy changes. When I've made investments based on those policies. So that's the primary concern.
Gabriel Dahosa, CEO of Uhimaji & Co. Thank you so much for coming on the program this morning and sharing your perspectives with us.
Thank you.
We're going to take a look at the markets in just a bit, so stay with us. Chukwuma Anyanwu, who is head of research at GTI Securities, will be joining me to review early trade from the Nigerian Stock Exchange. Stay with us.